All right. Hello, everybody. Welcome back to another episode of the Market Close. It has been quite the day for the equity markets, and I'm sure people have been hopefully enjoying this day. Folks, we are looking like we are going to end green on the day. We are looking like we are going to end green. S&P 500 basically up about 3% as we get into the close. Very, very nice to see some of this momentum on the S&P 500. 581 up about 2.96% currently right now. If there is a lag on the stream, give it a second. I think that lag will be fixed. It's being a little choppy right now, but that should get fixed in a second. Overall, markets were green today. It was a very exciting market green day, and you got a lot of stocks across the entire sector that held on to their momentum. Tesla right here, 317, that's up about 6.4%. Robinhood, 57.40, that's up 5% of the day. SoFi, $14, that's up 6.2. I think SoFi at one point was almost $14.20. Amazon, 208, that's up 2%. Palantir, 118, was red on the day. Now it goes green. Meta, 638. I didn't even see Meta passing 630. There you go, up 7.78%. And then Nvidia, 122.31. That is also green on the day. I don't know why the stream is being weird. The audio should be fine. But I look like a potato, dude. Look like a full-on potato. Hopefully the audio is okay. The audio should be all right. This will fix itself. It's just being a little moody right now. It didn't get the memo that the tariffs are done, so it doesn't need to be tariffs anymore. But hopefully that should be fixed in a second. In general, it has been an incredible day. Exciting markets. These are, the reasons why we invest at the end of the day. It's seeing some of this momentum has been pretty damn incredible. And what it feels like is this momentum is not really dying out based on some of the headlines that we got today that we'll talk about. But as of now, it's been pretty fun. Pretty fun to see kind of how this is playing out. All right, it should be fixing itself up right now. I just closed a couple things, so that should be a lot better. Yeah, Steve had a better cam last night. Your camera's Fidelity. Well, speaking of Fidelity, no, it's not Fidelity. But speaking of Fidelity, Fidelity took a big stake inside of CoreWeave. So Fidelity bought about 9 million shares. We'll talk more about that. That stock is also up right now. Let's go to Tom Lee. We got a bunch of headlines. Here's what Tom Lee had to say today. He's bullish.
The high yield market never confirmed the panic that we were seeing from the economists about the economy. High yield spreads did widen to like 439 basis points wide. But if we were barreling into a recession, they'd get to 700 or so, and they're back down to like 360. The second is that the stock market did have a liquidation event, as you point out, but waterfall declines, all of them, 17 out of 18 since 1950, had a V-shaped recovery. So we knew that whenever the bottom was established, the bottom would be a V-shape. 2022 was the only real exception because of Jackson Hole. And the third is we had a lot of faith in businesses. These companies have been battle tested. They survived a pandemic shutdown. They survived a bullwhip effect from a recovery. They survived the fastest rate hikes in history. So I think that businesses really should get credit, and they've delivered earnings even for Q1 and for guidance that have been way better given the Armageddon that we expected. So I think those three things are the reasons we sort of told our clients to kind of buckle down and even add exposure.
So, look, he was right. Tom Lee said people rage sold at 4,800. They missed out on a 20% gain. That's why you kind of try not to rage sell. You can miss one of the 10 best days during the year, and most of the market gains happen during those 10 best days of the year. Number two, he said the 10-year at 4% isn't a huge burden. I know a lot of you guys are asking about if this is an issue. It's not if J-Powell cuts. It's an issue if J-Powell doesn't cut. At this point, I think the pressure is on J-Powell to cut. So eventually this 10-year will not be at 4% or 4.5%, whatever it's at today. But given that stocks are up, the 10-year is allowed to go up. It's when stocks go down and the 10-year goes up that we have an issue. In general, if J-Powell's cutting, that's not going to be that big of a deal. Three, he said 2026 has a ton of deregulation coming, tax cuts and better trade deals, which is also going to be really bullish for 2026. So he's saying if you look forward, the market should be able to price in even further growth going into the next 2 years. And then finally, he says, which, he's accurate historically on, it's hard to lose buying stocks at a 50 VIX. It's just hard. We saw this during the Japanese yen carry trade. We saw this during COVID. We saw this on April 8th. Like, it is really hard to lose a year out 100% of the time. You tend to be up 3 months, 6 months, and 12 months later if you buy stocks when there's a 50 VIX. And if anyone bought any stocks during that 50 VIX time around April 3rd to April 8th, you've done pretty well. NVIDIA right here up 5.25% on the day, getting a ton of momentum. SoFi 14, PayPal 72, Palantir relatively flat on the day, but still green, which is nice to see. 118.38. Palantir did get a price target upgrade by Bank of America from 125 to 150, which we talked about on the market open, but I think it's just continuing to normalize this triple-digit range for Palantir. A lot of people thought it wasn't possible, but it feels like it is possible, and that's why Palantir is getting some momentum right here from 125 to 150 on Bank of America. And again, Bank of America is more of a defense analyst versus a software analyst, so they're looking at the government business really ramping up. When you put defense and software together, that's where they come to the conclusion where Palantir could be worth $150. Now, one of the reasons NVIDIA is green is because we are getting this headline right here. UAE chip deal could be hundreds of thousands of GPUs. Donald Trump is on his way to Saudi Arabia. He took a big dump on Big Pharma this morning in his press conference. And then after he took that dump, he decided to go to Saudi Arabia to engage in some discussions with them around geopolitics, technology, investing, the Middle East, etc. And as a result, I believe that one of the things he's going to be doing in Saudi Arabia is potentially getting rid of that AI diffusion rule that Biden signed into law 3 days before he left office, which stops NVIDIA from selling into places across the world, one of those places being the Middle East. And I mean, as a result, if he can get the UAE to buy a lot of chips, which by the way, they got a lot of oil money and they want to buy a lot of chips, and they need to transition their economy from not being an oil-based economy to being a tech-based economy. Saudi Arabia, the UAE, Qatar, I mean, all these places, they've got the money. The question is the United States going to allow NVIDIA to sell to them? And what types of chips? Like, do we want to sell them Blackwell? Do we want to sell them the H20, H100? These are all questions the administration is going to have to come up with. But NVIDIA, 10 cents away from 123. I mean, the reason it's pumping right here outside of that China deal is that if they are able to unlock what Biden shut off for them back in January, that's bullish. And then on top of that, if China starts to become into play because, you know, we get a really good deal with China and maybe China says, hey, we'll buy $500 billion more of your agricultural goods if you allow NVIDIA to sell us the H100. Maybe Trump's like, yeah, you know what? We might as well, like, this is a decent concession. It helps NVIDIA, keeps Huawei to not be as competitive. And although there are some national security impacts from it, it at least allows more trade between the US and China. And that might be something that Trump capitulates on. So from that perspective, I think all the stars are shooting higher for NVIDIA, up 5.4%. And that's why the market looks relatively excited. Tesla right here, 318. That's up 6.7% on the day. Again, you had Palantir at 118. Robinhood tried to go for 60, could not make it today. 57.42, still up 5%, which is not too bad. Archer has earnings after the bell. We'll be taking a look at them and a bunch of other companies. Hims was up 12%. Now it's up 6.7%. Still doing an incredible job in terms of continuing the momentum it had last week. Last week, it was up 100%. So, I mean, you've seen really, really good momentum on Hims. And then the pharmaceutical companies have been benefiting today. Eli Lilly up 2.76%, even though Trump's executive order was launched on the price caps for prescription drugs. Apparently, the main companies that are getting hit are the PBMs, the CVSs of the world that are down 3.5%, the middleman that create the actual upcharge when it comes to selling prescription drugs, not the actual pharmaceutical companies like an Eli Lilly, J&J, AbbVie, etc. So, I mean, from that perspective, it's been a hell of a day for the markets. It looks like we are continuing to see some more strength. The S&P 5 minutes until we close up about 3.08% right here. The Qs at 506, they're up about 4%. And it's just kind of hard to be bearish. I wouldn't blame anyone for selling some covered calls, taking some profits, but it's a little hard to be bearish right here if the worst is baked in. And I think that's one of the most exciting things about this current market rally. Remember that the rally we're seeing right now as well, and we'll get into earnings in a second. I'll tell you guys which earnings we have today. We are basically right where we were in January. We were at 5,800 in January. We ran up to 6,200. We came all the way down to 4,800. Before a Liberation Day, we were at 5,600. We're now at 5,800. We're basically at where we were during January. The S&P 500 is basically flat year to date. It's down 0.47% year to date. So one of the things Tom Lee said as well is that, hey, if you miss the dip, you kind of haven't missed the market, because if we're on track to make new highs, then you could kind of still buy back in right now, which would obviously not be the worst thing in the world for anyone that bought the dip. And that's also why we're seeing some exciting momentum. In terms of earnings today, so these are the companies that we are looking at. We are looking at Archer, Rigetti, which is Quantum, SMR, Nuclear, SPG, Simon Malls, that's a real estate company, Hertz, and that's pretty much it. So these are kind of the 5 companies we're looking at. Not super, super big companies, but they are relatively important to different populations that have taken a bet on these names. So I'll make that watch list right now. And we will take a look at them. So Archer, we got this one today. We're not going to be listening to any calls, but again, we will look at the earnings. Rigetti, that's a Quantum name. You got Simon Properties. You have Hertz, which Bill Ackman just bought 20% of. Hertz right here is at $6.91. I think he bought basically at the $7 range. And then you have SMR, that's a nuclear company. We will be taking a look at that. That stock right here up about 3% currently as we get into the close. Oh, and then ASTS. I forgot about ASTS. We'll look at ASTS as well. And so we'll keep that on the board right here. Nubank is tomorrow. Nubank is tomorrow. Nubank is not today. So we will look at that. GCT, yeah, we have them as well. GCT. We'll pull up these guys as well. This is also a cloud company. All right, we got about 3 minutes. Let's hear a little bit more from Tom Lee, and then we will get into this market close.
The professional universe of investors, looking at political surveys, more than 60% are Democratic leaning. So their interpretation of the actions of the White House was half empty. So we saw an exaggerated move in equities relative to the bond market, where in the bond market it actually is flipped. In the fixed income world, 60% of bond managers are registered Republicans. And so that's why I think you get better signal, at least in this instance, from what the bond market was doing. And the second is, of course, something people have talked about is the 10 best days. We were highlighting this multiple times that if you exclude the 10 best days of 2023 or the 10 best days of 2024, the S&P only returned 3% a year each of those years. So you need to stay in the market, as you point out, in order to get the 20% gains. And I think this year is another example of people rage sold at 48.35, and now they're buying in today. They missed 1,000 points or 20 percentage points of a gain in 2025.
It's pretty damn incredible, dude. It is pretty damn incredible how quickly things can change. The S&P 500, we got about a minute left. Wow, we are pumping into the close, folks. 582.53. Remember that 200-day is at 570. We are well above it. 3.26% is not too bad to see currently right now. It is one of those moves. I mean, we're about 5% away from all-time highs. At 5% away from all-time highs. Again, we looked at this stat in the morning, but on April 3rd, hedge funds sold the most amount of stock they have sold since 2010. Retail inflows on April 3rd were $4.7 billion, the most they've ever bought in a single day in over 10 years. So, I mean, it looks like so far retail has been right about this thesis on just staying put, buying stocks, and trusting in your long-term thesis. And if hedge funds have to buy now that retail bought the dip, this might get even more fun over the coming months. Here we go. Monday, May 12th, 4 p.m. Thank you, everybody, for being here. The stock market is now closed. Let me know if it's still a Temu bell. I've been working with some of the settings. If it's still a Temu bell, then I've got to fix more of the settings. But yeah, let me know if that is a little bit better. It might be a little bit Temu-ish. It's still underwater. Okay. So later in the show, I'm gonna fix another setting. We're gonna ring the bell again, and then let me know if it's still a Temu bell or not. But for all the people that hate the bell, I'm sure you're enjoying the fact that it's a Temu bell. Robinhood ends out the day 5.16%. Tessie 3.18. Back to the 300s on Tesla. That's up 6.82% of the day. SoFi ends the day at 14, which is very nice. We haven't seen 14 in a couple months. 14.03 on SoFi, up 6.45%. Amazon, which was at 180, it's up 9% today. It was down 9% on earnings, which is incredible. 209, up about 8.3%. Meta, almost 640. That's up 8%. Palantir, 118.46. NVIDIA, wow, didn't get the 123 close. 122.97, pretty damn close to 123. Google's at 158. Microsoft 449. That is a new 52-week high for Microsoft. Grab and $5 are mortal enemies. I think the street is waiting for something big to get them over that $5 hump, but unfortunately we are not there yet. Hopefully after that GoTo acquisition, and maybe before that if we get good results on earnings. But grab right here, $4.99, was not able realistically to stay above 5 throughout the entire day. So going to need some more momentum to get that above $5. Coinbase 206, that's up about 3.85%. Reddit was 111. Bitcoin down about $3,000 on the day, 105 to 101. It is what it is. Basically 102 right here, 101.9, but still can't complain. Bitcoin above 100,000. Archer right here, 910. We'll get into earnings in a second. GameStop's up 1.74%. Intel was up about 3.64. The S&P ends at 583, up 3.46%. That is incredible. That's got to be, I think, one of the top 5 days of at least 2025. We had some really good days so far this year. We had that 10% day on April 3rd or on April 12th, but let's see if we can build on that momentum. And then the Qs right here up 4.26% on the day at 508 currently right now. SoundHound had a great day. They had a great earnings last week, 22%. You had some quantum names like D-Wave that were down 3% on the day, but they were up 40% last week. So market selling into a little bit of that strength. And then Baba right here up 6% on the day. Uber was up 6.3%. I believe that's all-time highs for Uber, if I'm not wrong, 88.10. And you had Lyft that was also up 2.7% currently on the day. Fun day, dude. It was a fun day. You guys are saying NVIDIA closed at 123. Let me check to make sure. Did they close at 123? Yeah, they did. Wow, 123.08. It's down a little bit right now after hours, but we did close at 123. That's really nice psychologically. There's this clip I found of Jensen speaking that I have to show to you guys. This clip absolutely blew my mind based on him talking about the logistics of how NVIDIA does their business. So I'm going to play that clip in a little bit. But NVIDIA right here, 122.88, did close above that 123 level on the day, which is incredible. Yeah, the cruise line's also a great day. Nubank is tomorrow. Nubank is not today. Nubank is tomorrow. NCLH was up over 8%. You had all the cruise lines right here get some love. That was up 7.85. Carnival, I think, was up 8%. Carnival, 9.6%. And then Royal Caribbean. I mean, it was really hard to find a stock that was red today unless it was super, super green going into the pre-markets like a MicroStrategy, right? Bitcoin fell, so MicroStrategy fell about 2.6%, but MicroStrategy is up basically 37% year to date. And then some of the PBMs in the pharmaceutical space were down, but outside of that, you had a lot of green names, even Hims up 6.3. All the China names like an Elf, a Lululemon, a Nike, they were up on the day. So it was just one of those days where if you own the markets, anything in the markets, you've had some momentum. Nike right here up 7.34% on the day. Nebis as well. Yeah, I'm going to have a friend get on the show, Nebius, to talk about this probably tomorrow. That was up 17%. They got a big price target from Goldman Sachs to $35. So we'll talk more about this company in the semiconductor space as well. Okay, earnings. So first of all, let me know which of these stocks that you own. We got Archer, Rigetti, Simon Property, Hertz, SMR, ASTS, GCT, and Plug Power. I don't own any of these names, so I'll wait for the results. Let me pull up a couple of things right here and see if we've got anything yet. Oh, wow. Breaking. U.S. expected to announce Saudi AI chip deal this week. Wow. That 3 minutes ago, just got that headline. I think that was similar to the New York Times headline about the 100,000 GPUs, but this one is a bit more official about when it's going to be announced. So there you go. That probably explains why NVIDIA got that pump, which is why I got very excited. Archer earnings are out. All right, here we go. Let's start off with Archer earnings. Earnings per share, negative 17 cents versus negative 28 cents expected. They beat by 39%. Revenue, the street wanted $1.83 million. Archer brought in $0.00 of revenue. So they missed on revenue. I didn't really expect Archer to bring in a ton of money, so I don't think that's the biggest deal in the world. And then EPS, they are not profitable, but they are a little bit less not profitable than what the street expected. Archer right here, basically flat after hours, 1.2%. 1.2% on Archer. Nothing there. That's weird though. Why did the street expect $2 million in revenue? I thought this company was doing zero revenue. I know they have a big backlog of about $6 billion. That's why people are really attracted to their ability to ultimately sell a lot of these eVTOLs that they're making. But that is kind of weird. Archer now up about 2.6% overnight. There you go. Now we're getting a little bit of a pump. By the way, I just switched to Webull because Robinhood Legend still is being weird after hours. Like it's showing the cumulative percentage gain, not the after hours gain. So that's something they really got to fix. But On Webull, we can see the after hours gain. Oh, there you go. There's your pump, 5.5%. It looks like that EPS beat by about 30% was enough to do it. And that's what's getting some love. I'll pull up some of the other names, but these are the main ones that I'm looking at right now. Archer, 7%. There she goes. There she goes. She's up. Rigetti, that's another big one. Rigetti's down. Rigetti down 4%. Rigetti down 4%. Let me see if I can get the numbers for Rigetti. Don't have them yet, but I do have Archer. Fun fact, Palantir actually used to be an investor in Rigetti like a while ago, back when they were like 40 cents. And I think we sold out of our stake at like 70 cents a while ago. But if we had held on, would have done well. All right, Rigetti's earnings are out. Here we go. Revenue, they missed by 42%. 2.5 was the expectation. 1.42 was the result. Now, EPS, I mean, I feel like this stock should be up a lot more. Street thought they would lose 6 cents a share. These guys put up 13 cents a share. They are now profitable. I mean, I know Rigetti's valuation, one could argue, is kind of crazy. $3 billion, market cap doing 1.42 million in revenue, but they're profitable. They are profitable unless they cooked up their EPS in some way to kind of show they're profitable with tax credits or something like that. I mean, I feel like that's a hell of a beat. 317%. Rigetti right here, down about 5.6%. Archer's up 12. Market likes it. For whatever reason, the market likes it. There you go. Hit 1040 at one point, now up 11.6%. Right in that range of $10.18 currently right now. All right. Well, congrats to anyone who owns Archer. I mean, doing okay. Zoom Info, we got those earnings. I don't know if you guys care too much about that company. This is a data intelligence company in regards to sales. They're down about 4.2%. Their earnings beat by 5% on EPS, 23 cents versus 22 cents expected. 305 million in revenue versus 295 million. They beat by 3% on revenue as well. This stock down about 5%, $3.49 billion company. Rigetti's down 9%. Plug Power, that's up 1.14. Don't have their results yet. Archer still up 10.4%. GCT don't have their numbers. Giga Cloud Tech, but they are up 6.6%. This is definitely a small cap, less than $1 billion market cap, but they are green currently right now after hours. Simon Property Group, let me take a look at them. CPG, they are down 1%. They are down 1%, 1.85%. Currently right now, this company is a $55.9 billion REIT. ASTS, I don't have their numbers. They are up a little bit. What is the market expecting on ASTS? Let me see. Let me see if I can pull up these expectations. I don't think the market expects them to be profitable. This is a company doing a couple million in revenue, from my understanding, worth $9 billion. Their T-Mobile deal is one of the main reasons that the street is excited about them and why retail is also excited about them. Google took a 4% stake in them last week. So that could also be something that the market's liking. The market wants negative 21 cents of EPS and 3.85 million of revenue. Negative 21 cents of EPS, 3.85 million of revenue. So the market is not expecting them to be profitable, at least not today. Don't have their numbers yet. Rigetti still down 5%. It was down 10%, so a little bit of a recovery. And Archer still holding onto a 10% pump. Still holding onto a 10% pump. Okay, Hertz is flat after hours. Nothing really that we can get there. And then SMR, New Scale Power Corporation, that is also flat. I don't have their numbers, but that's basically up about 0.5% after hours right now. We'll talk more about CPI. I'll talk about expectations for CPI. I'll be live at 8:20 a.m. Eastern, so I'll be live 25 minutes earlier tomorrow. CPI is going to be very important. I know I always say the CPI is the most important one, but this one really is the most important one until the next one, which will be the most important one. But we got to get below 2.4. We got to get below 2.4 in the headline and put some pressure on Powell to cut these rates. So we're going to need a good CPI. Archer is still up 9.7. Rigetti down 4.8. It is recovering a little bit from the worst of it when we initially got their numbers. NVIDIA after hours, how is NVIDIA doing? NVIDIA is 122.80. Again, we closed at 123. The other quantum names, D-Wave is down another 1.2% after hours. And IONQ is down about 1%. So Rigetti kind of taking down all of the quantum names. Rigetti now down about 5.2% currently right now. Do you have on numbers? Do they report today? On? I don't. That's the shoe company, right? I don't I'll check their numbers. I didn't think they reported it, but I will take a look at them. These are the sneakers, right? Yeah, I'll get their numbers in a second if they do have earnings today. Nvidia right here down a little bit after hours, and then Rigetti still down 6%. Archer, wow, Archer got a red candle. Was up 10, now it's up 5. Was up 10, now it's up 5. Redwire's down 13%. Didn't get their numbers, but they're not down 13%. That might be a glitch. Redwire was down 6% during the day. This is it's kind of like a Rocket Lab competitor, this company, Redwire. It's a bit cheaper than Rocket Lab in terms of its forward sales multiples, but this one is up a little bit after hours. On is tomorrow pre-market. Okay, cool. On is tomorrow pre-market. By the way, Shopify, just an incredible day, up 13%. If you own Shopify, congrats. They're replacing MongoDB in the NASDAQ. So that's what got them this pump. MongoDB was also up 7% on the day, but Shopify right here up 13% based on that momentum. Okay, cool. Let's see what else we have. I mean, the big one was Archer. I'll try to get some more specifics on their results. They're up about 5.17%. Eli Lilly's tomorrow. That's also important. All of the quantum names are down a little bit right now. Archer is mentioning Palantir partnership multiple times in their news release for earnings. Well, I mean, it makes sense, right? Palantir is the AI darling of the market. So this is the other thing about Palantir. This is why I think their organic growth is so strong. I mean, every company wants to be associated with Palantir, right? Because every company wants to be seen as a company that's innovating and at the front edge of technology and AI, et cetera. So if I was Archer, I would be flaunting that partnership as much as I can as well. For that, we are an AI first at the end of the day. More of these numbers, still waiting. Let me see some other sources. If I can get some other companies. We looked at Zoom Info, we looked at Rigetti, we looked at Archer. And those are the main ones I have right now. Still looking for some others, but don't have them. Don't have them yet. Thoughts on Plug Power? This company, this was a $60 stock, right? I remember buying this in 2019. Yeah, look at this thing. Okay, so they obviously did some reverse splits because along the timeline they've been public for years at this point. I have no thoughts on Plug Power. It's a billion-dollar company. Don't really know much about them. I know at one point they pumped back in 2021 aggressively. Don't have their numbers yet, but I wouldn't expect some dramatic move up or down given the stock could get delisted to be under $1. So Plug Power basically flat. That sound okay? We're gonna switch. Hold on. Are we good? Are we good? Are we good? Yes or no? Yes or no? Let me know if we're good or not. Let me know. Let me know. Better, dude. I am really getting tired of StreamYard. It's like, because I'm telling you guys, it's not me. It's StreamYard. It's not the internet. It's not the laptop. It's this freaking software, and it's the easiest one to use. But when they have mistakes like this, you just can't stand using them anymore. So hopefully we're gonna switch soon and find something better. But at least Mike's better now. Mike's better now. Yeah, I just have a separate mic attached, so I just switched to a separate mic. That's it. It has nothing to do with the audio drivers. Like me switching to a separate mic and then the mic's fine is ridiculous. Like that's a stupid software bug that they have about like turning the computer on and off and then it works. Like it's not like it's using too much computing power or anything like that. So it's just weird. But at least it's a little better right now. Nvidia right here down about 0.31%. Hertz is up about 0.43. I don't have Hertz's numbers. Let me see if I can get those in a second. See if we have Hertz. That's a big one for Ackman. I'd be very interested to see how that one plays out. No numbers on Hertz yet. I think we're waiting until about 420 for those. Ackman is pushing Uber to buy them out, but don't have those yet. Why don't you use OBS, dude? So StreamYard, the beautiful thing about StreamYard is it's an application layer on top of your computer. And so it's using a lot of the cloud. OBS is actually using your compute on your computer. So it's like legitimately using the GPUs inside of your Mac. And that's just like, it just becomes worse. I used OBS in 2022 actually, and it was a mess because although it's a better software and it has less bugs, it uses a lot of computing capacity, where StreamYard uses everything inside of their cloud. So StreamYard has more bugs, but OBS tends to be a little bit more laggy, especially when there's that much power being used up from it. I'm not opposed to it. It's one of those things that has not worked out in the past for me. SMR right here, that's down about 1%. Hertz is up a little bit. Not getting too much love there. Rigetti still down 8%. All the quantum names getting hit. And then Archer, that pump turned into a fade. It was up about 15%. Now it's up 2%. So that one has not really seen any love right here. Microvast, I don't have these numbers. Another small cap. Don't know much about this company. They're up about 9%. Don't have their numbers right here. I'm actually not familiar with this company at all. But if you own this, it's up 9% right here under $1 billion market cap. So that one getting some momentum. SMR, we're still waiting for numbers. And then Hertz, we're still waiting for numbers as well. Most streamers use 2 machines. You know, when I move out, I think that might have to be the investment, is just setting up a whole nother machine to run the computing on separately and just not doing it all from one thing. At least for now, this MacBook has way less lags because I upgraded it, but I think that might be the goal in the future. It's just to confirm, you know, nothing actually happens. Archer 2.7, Rigetti's now down 12%. That one's getting hit. GigaCloud up 12.4. Let's see if we have any other numbers out. I don't think yet. No, still the only last one we have is Rigetti. We're waiting for a couple more, probably at 4:30. We'll get some of them. But the rest of these are not out yet. Rise Rigetti down so much after a beat. Well, Rigetti, they missed on revenue by 42%. So it was a big beat on EPS, which I think they should be up on based on the fact that they're profitable now. That's good, right? You want companies to be profitable. But it's trading at a $3 billion market cap, missed revenue by 42%. And if that profitability is fueled through gimmicks, essentially, to get them to be profitable versus actual income from operations that goes to the bottom line, then, you know, the street might be overlooking their profitability right now. And that might be the reason it's not as aggressively moving currently right now. But look, you can't complain if you're a Rigetti investor, dude, unless you bought it yesterday. I mean, this freaking thing is up 900% in the past year. So if you chase this thing this morning and it's down 12%, it is what it is. But there was a lot of people waiting in 2024 buying it at $1 or 50 cents, and you've obviously still done very well. At one point, it was $18. At one point, it was $18. It's right now down at about 11. Thoughts on TLT, Amit? I'm still long TLT. I think selling puts on TLT right now is not crazy. Eventually, JPow's going to have to cut rates. And we'll talk more about him cutting rates in a bit. But if he doesn't cut rates, then TLT is going to be a horrible play. I would assume the decision is that you can't continue to have the federal funds rate be double the rate of inflation. And if that's the case, I don't think TLT is the worst play right here. But if he doesn't cut rates, then, yeah, we're going to be screwed. So we need those rates to come down. ASTS is down. ASTS is down 2%. Let's see if I can get their numbers. Again, Street's expecting them to lose about 21 cents. You don't have to be profitable. Let's see what numbers they have right here. ASTS down about 2.3%. Okay, so they put out a commercial business update. These are not the headline metrics. I'm looking for that, but they did put out a business update. So here's what you got right here. ASTS now down about, again, almost 3%. They announced multi-provider satellite orbital launch plan with 5 contracted launches. The network commercialization efforts are expecting to lead to $75 million of revenue in the second half of the year. They activated 2-way video broadband calls with AT&T, Rakuten, Verizon, and Vodafone. They continue to make strong progress on regulatory approvals, and they have a robust balance sheet with $874 million in cash, almost $1 billion in cash. Not crazy. The top line metrics look like it's bad. $8.9 billion is the market cap, which is kind of the issue for a stock like this. Let's see what the headline metrics are. ASTS right here down about 4.09% currently right now. Let's see if I can find this on their website as well. Does anyone own ASTS? The earnings are definitely out. Question is right here, how bad were these metrics? Yeah, I don't see the top line results yet. I'm still waiting for EPS and revenue, miss or beat. I'm pretty sure it has to be out given they put out their business Q1 outlook right now. Down 3.7. This one also, though, you can't be too mad about this one. Just like Rigetti, like if you bought this one cheap back in 2023, 2024, I mean, you've done very well. So if you chased it, it's tough, but if you've been in it for a minute, I mean, I think this thing was like $4 or $5 a year ago. So even with, an aggressive market cap and maybe a miss on earnings, I don't think anyone can be necessarily upset about it. Yeah, their ER says they see 50 to 70 million in revenue in H2 2025, but I don't have their actual revenue for this quarter or their EPS yet. I will get that to you as soon as I see it, but as of now, I don't see it. I don't see it right now. Same market cap as Rocket Lab. That is correct. They are doing Rocket Lab's obviously doing way better than ASTS in terms of pure revenue growth. Rocket Lab is also way closer to profitability. Rocket Lab right here, 21.26. That was up about 3.6% on the day. But ASTS definitely has a cult of investors, just from what I've seen on X, that they swear by the name. They think this name is going to be a big player when it comes to space. And Google did take a 4% stake last week, so we do have some big guys putting in some money right here. Shopify 104.34. That's up about 13% on the day. D-Wave's down 2%. Nvidia's down about 0.3. Again, the big UAE chips deal looks like it's going to be announced. Trump is on his way to Saudi Arabia right now. If Nvidia gets to sell billions of dollars worth of chips into the Middle East, that is obviously pretty bullish. Archer right here up about 4.3% on the day currently right now. Let me go to Archer's website and see if we can get any specifics on their website as well, outside of the top line. Particularly, I'm curious if their backlog increased, because that would be important. We'll see what they say right here. All right, so Archer, here's what Archer has to say. We don't have Hertz's numbers out yet. We're going to be waiting for Hertz and ASTS. Archer says UAE launch remains on track for later this year with plans to deliver a piloted Midnight aircraft to the UAE this summer. The Midnight Launch Edition program rolls out with its first two customers, Abu Dhabi Aviation and Ethiopian Airlines. The Midnight is the name of their eVTOL. Partnering with Palantir to build AI for the future of next-gen aviation technologies, and total cash position surpasses $1 billion, leading the industry with Q1 2025 spending landed within its guided range. Archer CEO says, Archer is pushing the boundaries of what's possible and reshaping the future of aviation for years to come. This quarter, the team made strong progress across our civil and defense efforts as we continue to deepen our strategic partner relationships and prepare for commercialization in the UAE later. That's it. Not profitable, a little bit of revenue, but overall, you are betting on potential if you're buying Archer right here. If they can continue getting some momentum. And, that's the big thing with Archer. That's one of the reasons I don't own it. It's like, I think it's a lot of potential, excited for it, but I do think there's not really any earnings yet to bet on. $5 billion company, $1 billion market cap. Kind of have to really see, can they deliver these eVTOLs to get to the clients, use them, can they get purchase orders for more eVTOLs? So there are some questions there, but the stock is up from $3 in November of 2024. So they've had a hell of a run, even if it is not continuing to be as aggressively pursued by the broader market in 2024. How is the mic not working? This is ridiculous. This is insane. All right, hold on. Let me switch over real quick. Are we better? Yes. Still sucks. Okay, hold on. Give me a second. Give me a switch real quick. We're gonna switch.
Do you have any thoughts on kind of bond yields at these levels? Does it matter? I mean, just kind of picking up on what we were just discussing. And for those who missed and wish that they had piled in at the lows now a month ago, what do you say now? That no one now wants to go, all right, fine, I'm going to make my move now, and now stocks are back at the highs, and maybe we then slide lower again. So just some kind of general advice.
Yeah, I've got a couple pieces of advice. I mean, right now, the 10-year yield at 4%, I think isn't a huge burden for not only for the government, but also for the economy or for companies. So I think it's a level of funding that businesses can earn a return on.
Okay, how about now? Are we better? And if we are better, literally turning it off and on is kind of ridiculous. Yeah, it's better now, right? Dude, this is just stupid at this point. Like this is literally, like, I mean, like, you talk about tech support, turning it off and on is kind of ridiculous. Let's finish with Tom Lee right here on this thought, and then we'll get back into it.
Capital. And then as we think about 2026, there's a lot to be excited about. We have deregulation coming. We have the tariff debacle behind us. We have tax cuts possibly, and then we might have better trade partnerships with other countries, meaning U.S. companies have earnings upside. I think that the market is flat year to date through May. So I don't think anyone should feel like they missed anything. I think that they're going to have a chance to buy a lot of companies. A lot of stocks got obliterated. And I think that these washed out names are still opportunities. And we talk about it with our clients, whether it's Tesla or the Mag 7 or the small caps, there's many opportunities still.
So Tom Lee is still bullish regardless, if you bought or not. Yeah, guys, turning it off and on. That's it. It's kind of stupid, bro. I really think it's a StreamYard thing. I don't think it's a microphone thing or a computer thing or a Wi-Fi thing. So I don't know. That's getting really annoying, but I will try to work on that, figure it out. I definitely think when we move out to the new studio, we'll have a lot more advanced ways to be able to not have to deal with these issues. But yeah, as I'm now turning it off and on, seems like the solution. You know what? We might just try a new stream service tomorrow and just play with it and see if it's better. But none of these are that good, so they might have their own issues. But hopefully we'll see. We'll see what we got going on. Archer right here up about 7.49%. Hertz, we still don't have their numbers yet. Hertz right here up 0.13. I don't see any numbers on Hertz. ASTS, I still don't see their top line numbers, even though they put out their earnings deck. But from what it looks like, I don't think they made any revenue in Q1, which is why we're not seeing any revenue numbers. And it looks like they're definitely not profitable. In terms of Hertz, okay, we don't have Hertz, but we have SMR. We have SMR. Here we go. They beat revenue by 290%. That's bullish. Way better than what was expected. Stock's basically flat. And EPS came in at negative 12 cents. That also came in flat, in line. So EPS came in flat. Revenue beat by 300%. Revenue beat by 300%. So not too bad. All right, cool. That's it. That's what we got on new scale. Stock's really not reacting to that. Stock was up decently this year, so I don't think there's there needs to be any big momentum right here. But SMR in the nuclear space, if anyone owns this one, not really moving after hours. Oklo, we did see that New York Times headline last week. Oklo right here was up 2.7% of the day, flat after hours, on Trump getting more excited to unleash nuclear energy in the United States. So that could be a general bid for the data center companies, the nuclear companies, etc. But SMR still not profitable, and revenue doing okay, but not really moving too much more after that. Okay, I think that's it. I think that's pretty much it. ASTS down about 1.3. Rocket Lab is flat. Hertz is up 1.4. SMR is up 0.05. Oklo's up 0.10. And then the big one on the day, which was Archer, not really doing a crazy move. I mean, it's up 7%. That's nice. It was up 15%. Then it went down 2%. Now it's up 7%. I guess on the call, we're going to hear what Adam Goldstein, CEO, has to say and if this thing can continue to pump a little bit more. But outside of that, that's what we got. Can you talk about Tempest? So, I mean, look, the thesis on Tempest, quite frankly, is just Pelosi, right? That's the actual thesis. But realistically, do you want to bet on a software company that is vertically integrated and that hyper focuses on healthcare AI? Because that's what Tempest AI is. I think there's a lot of companies that can do what Tempest is doing in a different way. Now, obviously, Tempest has figured out their own way to be able to produce revenues, $10 billion market cap, of getting the market to be excited about their version of healthcare AI. But from the little research I've done, it does feel like other companies can implement some of what they're doing, like Cerner or even a Palantir. So I don't know if Tempest really has a moat. It's obviously done very well from $25 early this year. But I think the real reason the stock is up this much is because Pelosi and Kathy Wood keep buying it. And so that's what's helped it a lot. But I don't know that much about the company to say that there's a definitive moat right there. It is a bit of an expensive multiple. You're paying 13 times on its sales, not its earnings. And I don't think it has earnings yet because they're not profitable. But Tempest right here up 2.15% of the day, 62.69 on the day right now. Is ASTS moving? Are we moving? ASTS is back to green. All right. That was red. That was at 25.60. Now it's at 27.50, which is not too bad. All right, cool. ASTS getting some love. We'll call Chris in about 5 minutes and we'll get his take on what he thinks is going on with with ASTS, or kind of like what his thesis is right there, and get some commentary from him. Before we get to him, I want to play this clip of Jensen that I found today, which is, if you're an NVIDIA investor, dude, it's one of those clips that if you haven't seen it, it's worth seeing. It's Jensen explaining how sophisticated of a company they are and how he hasn't seen a single company like them since the days of IBM. So here's this NVIDIA clip, and then we'll get Chris on the phone and we'll hear a little bit more about ASTS.
Not since IBM in the 60s has a company like us existed, where we come up with a blank sheet of paper, design a brand new architecture, create the chips, create the systems, create the networking, create the infrastructure, write all the software, take that software to the market, have the world's developers and ecosystem develop for that computer, kind of like we develop for iPhones, and you develop for Windows, you develop for NVIDIA. And so not since the 60s and 70s when IBM built everything from the ground up has a company like us exist. We build the chips, but we build the entire system, and we're really an AI infrastructure company today. If you look at the systems we build, each one of our chips, if you will, it's 1.5 tons. There's 1.5 tons chip. It's $3 million each. We build these things in very high volume. We manufacture it, assemble it, and then we test it. We use a supercomputer to test the supercomputer, because you have to be smart to test if the computer you make is smart. And so we test everything is liquid cooled, and then we test everything, assemble everything, we disassemble everything, put it on a plane, ship it to wherever the data center is, assemble it again outside their door, put it inside their data center. This entire process has 200 manufacturers and suppliers working with us around the world. We build a couple of $100 billion of it a year. At this moment, we're the largest technology company, chip company in the world, I guess, if you will. And so it's incredibly hard to do. Our R&D budget, per generation is probably about $20-30 billion. And so this is a giant game. But we're working into an industry, Mike, that the intelligence industry will likely be measured in trillions of dollars, and so the amount of investment that we're making is warranted for the opportunities ahead.
It was just pretty incredible listening to that today. NVIDIA, the amount of infrastructure they have to engage in, which is hundreds of billions of dollars a year of investment. Obviously, they make hundreds of billions of dollars a year, or they're beginning to make hundreds of billions of dollars a year in net income. It's pretty damn incredible. And that's what you're buying when you buy a share of NVIDIA. You are buying that level of sophistication in being able to bring the next generation of accelerated computing into the entire world. And it's just hard to replicate that. It's very, very hard to replicate the moat that NVIDIA has. We have ASTS earnings. We got Chris on the phone. He can be on for like about 3-4 minutes. He is driving right now, but I'm going to get his thoughts on ASTS. Chris, you are on the open. ASTS, they missed on EPS, or they beat on EPS. They missed on revenue. Your thoughts on this stock right here?
For ASTS, you got to have at least a 5 to 10 year time horizon when you're looking at this business. The reason why I like it is because it's a brand new industry, and it's going to be one of those tried and true industries that you can already see. So, we used to have literally just phone lines connected everywhere. And then we ended up getting cell phone towers. Now we're getting satellites. So, it's an evolution of an already existing business model. And ASTS has so many partnerships with a bunch of multinational cell phone providers that are out there. They own the technology that's behind it. They've got big backers like Google behind it. The chances of their success is way, way higher than people are letting on. And right now, you're technically getting it at a bargain basement price. It was a bigger bargain basement last August when all this stuff wasn't proven out. But now they've got a proven technology. They've got proven partners. So if you have a 5 to 10 year time horizon, this thing is going to be a free cash flow machine. Pretty much what's going to happen is all these cell phone providers are going to say, we're backed by ASTS. So now, as you're traveling to different locations, you have weak cell coverage, you still got coverage via the satellite, right? And that's going to be a very big thing, because there's a lot of parts of the country that still are not connected fully with towers yet.
Okay, so two questions. Can't SpaceX do this or no?
So yes, SpaceX does do this, but SpaceX right now, I think requires like a little bit of a satellite dish on, even if it's really small. ASTS goes directly to your phone. Now the thing is, it's all about the frequencies that these guys have. So when it comes down to it, it's all about spectrum. And the thing is, that is the moat that the business has. There's a limited amount of spectrum that you're able to utilize in order to do this connectivity. So even if, let's say, someone can replicate the technology and put it out there, even though it's patented, right? That spectrum is limited. And because these guys have partnerships with so many MNOs, that spectrum is going to be specifically shared for this purpose. And so this way it provides this ingrained moat. So if you ever look at like AT&T, Verizon, they bid billions upon billions of dollars for spectrum. And so because they have that spectrum and they partner with ASTS, it's like a partnership that's like I said, value accretive to both sides.
Okay, and then my final question is, do we just not care about, or do you just not care about valuation on this one at all?
Well, right now, there's no point because you can't value something based on no revenue, no nothing. All you can do is base it on future potential revenue. And, you just outline the business model. I know a lot of people right now, if you go to Twitter, they have different targets that they've all been kind of like alluding to. But I can safely say that this is a minimum 10 to 20x. But like I said, you have to have a time horizon that's not like a couple of years away. It's going to be 5 to 10 years away. But once these guys start generating real revenue and real operating cash flow, it's going to be a free cash flow monster. Why do you think a company like American Tower, who's the largest tower company on the planet, is also invested in these guys? They understand what's coming in the future. So for them, it's like, why do we want to compete? Instead, let's join hands, do an equity investment. We keep our existing business and we get the benefit of this huge growth driver in the future. So it's kind of like, imagine right now, Uber was to take its free cash flow and said, let me dump it into Google because of Waymo, right?
Right.
The value that Google would get, the value that Uber would get would be tremendous because even if, let's say, like Uber's business model was disrupted by autonomous driving, shareholders in Uber would be hugely rewarding. It's almost like the Blockbuster thing. Why did Blockbuster not just buy a stake in Netflix? You would have hedged yourself against huge future upside in case your business got disrupted. They didn't do that, which is why no one knows what Blockbuster is if you weren't born past 2010.
All right. That is the bull case on ASTS. Thank you, Chris.
Yeah. There's plenty of time to accumulate ASTS, in my opinion. So it's not something that I would go out there and be like, go full port ASTS. But like I said, if you have a 5 to 10 year time horizon, this is a company that's going to replicate a very similar growth trajectory to American Tower. And believe it or not, it might actually even scale faster because you don't have to actually do physical leasing of space and then build a tower. This is literally just launch the satellites in the air, connect them up, and there you go. Now you've got connectivity and you're good to go. You'll probably have to build like terrestrial sites too, but that's not that hard. So I think even from a scalability standpoint, they may scale much faster than what the towers were able to do 20 years ago. So Maybe this will actually do it in 5. But like I said, this is one of those things that if you have a 5 to 10 year time horizon, this thing in terms of a business model, it's going to be free cash flow like off the wazoo, dude.
All right. Got it. Thank you, Chris. Appreciate it.
Yeah. Have a good one.
Have a good one. These are the GCT numbers, GigaCloud Technology. EPS 83 cents, revenue 271 million. This stock is up 21% right now. I've never really heard of GigaCloud Technology. It's up 32% for the day. Small cap, under $1 billion market cap, but you got this one getting some momentum. We got Kevin Hasset on CNBC. Let's go to him. He is one of the national economic advisors around tariffs, and let's see what he has to say around China tariffs and any updates we have on trade deals.
What gave the administration, what gave the president confidence to move forward with what's essentially a ceasefire here on trade and cut those tariffs down to 30% for 90 days?
Right. Well, what gave everybody confidence was an enormous amount of work by the entire trade team and the president over the last few weeks, so that as Secretary Bassett and Jameson Greer went into the meeting, they had a complete roadmap of what they wanted and what was unacceptable and what had to be done to make a deal. And the Chinese went in with very good preparations as well, some of it behind the scenes beforehand with people, lower level people in both governments. And so in the end, I think that what's happening in China is we're rebooting the relationship. We're trying to make it better for both countries and fairer, especially for American workers.
The clock is ticking. There are 90 days. What needs to happen? What are the next steps that need to happen for to use Treasury Secretary Besant's words, a long-lasting and durable trade deal to actually materialize here?
Well, the president's been 100% clear that Secretary Bassett and Jameson Greer are going to continue talking to their Chinese counterparts. If you look at the agreement, we even have the names of the people that we're going to be talking with. And so I think that folks who are able to accomplish this very positive deal are going to continue to talk to make it durable and also to make it better. And so we've got 90 days to do that. And that's lots and lots of time in Trump time, as you know.
Yeah. Well, we are right in that window now when retailers typically build inventory for the holiday season. Sure. I see the potential for a big pull forward where businesses try to get absolutely everything they might need for the season, for the year in from China as soon as possible. Is that what you expect? Is that lumpiness? What's the economic impact?
Well, some of that was visible in the GDP release we saw in the first quarter, right? And so I don't think the inventories actually picked up as much as they should have given the imports that we saw in the first quarter. But now I think that basically what people could expect, what markets could expect, which is why they're celebrating so much, is normalization of things. And so we're going back to where we were with a 10% reciprocal tariff, and that should be fine. I can tell you that we look at what's going on in the shelves every day to make sure that there aren't shortages. And we've gotten briefings that suggested that there wouldn't be, even with the tariffs where they were, shortages at least until the end of the summer. And so now there's basically smooth sailing all the way through. For Christmas, people could put their orders in, and hopefully they'll be ordering more American products.
I'm hearing anecdotally about a lot of damage in demand from Canada, for example, just because in part of the breakdown in sentiment and feeling between us and them. Are you hearing the same, and what do you expect to happen from here?
No, I think that again, there were some difficult times. I think that Justin Trudeau and the president didn't exactly get along, and Canada kept making it worse and worse with their rhetoric. But now I think that we've had the prime minister come in and meet with the president and begin a new, closer relationship. And so I'm sure everything will work out fine with Canada in the end. And don't forget that exempting the USMCA part of trade was a really, really big plus for Canada. And so they've been treated very, very well throughout this renormalization of trade relations.
Kevin, I want to shift gears here because the reconciliation package is making its way through the House right now. It includes that tax bill framework, which we're starting to get some details about here. What's make or break for the president, especially since the clock is ticking on that one as well?
Oh, for sure. And again, we've been running these big 6 meetings almost every week with the majority leader and the speaker and meeting with the president. And he saw Jason Smith just last week to go over this bill, which he's very, very pleased with. The bottom line is that the president's top priorities are to take the previous tax cuts and extend them and make them permanent, but then to go after the things that are going to help middle class folks. Let's have no tax on tips, no tax on Social Security, no tax on overtime. Those are the top priorities for the president right now.
The early estimates have this coming in, this reconciliation package potentially coming in at trillions of dollars, to cost trillions of dollars more than I think what had been intended initially. How do you close that spending chasm, especially when bond vigilantes have been out these past few weeks?
Well, I think the bond vigilantes have probably noticed that we've got markets way up. We've got last month we had $16 billion in tariff revenue, which, multiply that out over a year is going to be a big reduction of the deficit. It doesn't count in the reconciliation package, but President Trump is all in on, in the end, in his budget, getting to a balanced budget, and that requires supply side tax cuts, getting people back to work with things like the no tax on overtime, and reducing government spending and getting revenue from tariffs. And with all that in our budget, we're very confident that we can balance the budget.
I'm confused by the president's messaging. Does he want to raise taxes on the top bracket or not?
Oh, no. What his rhetoric is very, very clear. There are things that the president said are his red lines. They're the things that he's identified as the must-haves in the bill, including the things we just discussed. And he understands that the House and the Senate are going to be haggling over the things they need to have in order to get the votes. And what he said is he wouldn't advise it, but if they were to have to do that, then he wouldn't object, because he understands that the most important thing for American workers is to get the big, beautiful bill passed. And he's not going to make a whole bunch of straitjackety rules for the House and the Senate.
All right, so that's what we got from Kevin Hasset, basically saying, hey, we are de-escalating in a pretty aggressive way, and that de-escalation will hopefully lead to some more momentum in terms of more trade deals. I think it was Hasset last week that said he's expecting about 20 deals to be announced within the next month. Real quick, before we get Steve onto the show to ask him about his thoughts on NVIDIA and what the Fed might do after tomorrow's CPI, we got this headline right here. Amazon has partnered with FedEx to fill some delivery gaps left by UPS. This is by Business Insider. UPS announced earlier this year that it would significantly reduce deliveries for Amazon. It looks like Amazon is picking FedEx over UPS. UPS stock here currently right now, basically flat after hours, not really moving. Amazon, again, up about 10% on the day. And then FedEx as well was up about 8.75% on the day. All right, Steve, how are you?
You should move to New York.
Why would I do that?
You know, just when you think you've seen everything, you see stuff that you haven't seen before. It is rush hour. I'm going down 42nd Street. And at 42nd Street and First, there's an overpass that people take photos because you can see straight across the city. But instead of taking a normal photo, there's a woman standing on the double yellow line in the middle of traffic on rush hour, and somebody's taking a photo of her from the overpass. It's like, how crazy are people?
Dude, it's the greatest city in the world. People want their pictures.
The middle of rush hour, you're not worried about your safety? Like, it just doesn't make sense.
I mean, what if she's visiting from Paris and she has 2 days in New York?
People don't make sense.
I love New York. I would never live there, but I love it. I love New York. And that's a lie. I would live there if I can afford to live in like a condo above Central Park. But if not, then I'm not living there.
Okay.
It would be like my dream to live in that type of a place in New York. Okay, Steve, NVIDIA, nice little pump today. By the way, can you turn off your metronome, please?
Just get me. I'm making a left turn. What do you want?
Okay,
Metronome.
Oh, you're pulled over and you were just taking it.
No, I'm not you.
Okay, all right, that's fine. NVIDIA 123 on the close, up 6%. What's your reaction
Yeah,
to that?
just get me to 127 before the week's over. I'll be happy.
You know, you suck at picking covered call strikes. I'm not gonna.
I know.
I suck too, but you suck way worse than me when it comes to picking covered calls. SoFi
shirts, because I gotta tell you, if we get the guy's face from Big Short and then Trump's face and say this is my quant, those will sell out.
Well, I mean, I don't know if you got the headline. It came out like 20 minutes ago, but apparently the UAE is about to buy a couple 100,000 GPUs.
Of course they are.
Why not, right? Why not?
Who is it buying GPUs is the question.
Well, if Trump gets rid of that AI diffusion rule, which looks like it's going to happen, that he's on the way to Saudi Arabia right now. Yeah, hundreds of thousands of GPUs. The New York Times is reporting the UAE is ready to buy.
Great.
Dude, I mean, I didn't think we would see 130 going into earnings. Who knows, man? Who freaking knows?
We could see 130 by the end of the week. I mean, we're following the data, and the data was suggesting from TSMC that they can't produce chips quick enough. And their main customer is NVIDIA. NVIDIA is selling out. I mean, NVIDIA should be much higher than it is today. It had 2 phenomenal quarters, and the street just sold it off and went sideways instead of rewarding it. And for the amount of growth they put up, they've done something no other company has been able to do with their revenue and net income growth over a 3-year period. They deserve to be higher.
Yeah, even at 123, I mean, it just hit a $3 trillion market cap again, but 123 is like still ridiculously cheap for this stock. I mean, 103 was stupid, but 123 is not like it's expensive if you believe their estimates, right?
Yeah.
And right now it looks like their estimates are very possible. Nvidia right here, 123. So is the plan, are you buying more? Do you kind of have your position built out, or how are you thinking of this stock right here?
I mean, I want more. I would buy it once it hits 150. I don't think I'd buy it anymore, but I want more at this point. At this price, sure.
You know, Tanner said his fair value is 250 by the end of the year. It's like, okay, I mean, 250 would be nice. I don't know if it's the end of 2025.
I would be very happy with 250. I think I've said my fair value is probably 180, 185 area, but I don't know. That could also change. I was also bearish on NVIDIA in 2023 and turned bullish because the data told me I should be bullish on NVIDIA. So I don't know. In 2 quarters from now, I could definitely say 225 or so.
Yeah.
I don't know. It's that good of a company that I won't critique it. It's just that good of a company.
Okay, so let's switch gears from NVIDIA to the Fed. We get CPI tomorrow. If we get a good print, what do you think happens in June when it comes to rate cuts?
I don't know. If we get what's the definition of a good print? 2.2 or lower?
2.3 is expected, so 2.2 or lower, I think would be a surprise.
If we get 2.2 or lower, they have to cut in June. They cannot, especially after everything that's happened in the past week. If we don't get 2.2, I think it's a 50-50 if they cut in June, but they definitely cut in July. The reason I say that is because they've been hiding behind what tariffs are going to do. We just got a 90-day pause. You got a term sheet for the EU. They are proving that these are just negotiating tactics to get everybody where they want to get them. Corporate earnings are high. They continue to grow, and inflation's coming down. You've had oil steadily between 57 and 65 for the past couple of weeks. That's going to have ripple effects through the economy. The Fed is running out of excuses to be restrictive. And there was no reason for them to pause cutting over the winter. And they say that they don't want to be political, but if they were truly neutral, I think they would be cutting. And it's just the economic data, bless you. But when I see inflation declining from 4.5% to 2.4% over the past 2 years, and unemployment going up from 3.4 to 4.2% over the same period, it tells me we have to worry about unemployment way more than inflation. And inflation is going exactly where we want it to go. And it's so close from their neutral rate that they should cut and see what happens instead of waiting to see what happens. Because they're waiting and inflation is just going to keep coming down.
So I guess here's the question. By the way, Goldman Sachs now sees the next Fed rate cut in December instead of July.
I don't know who's on their team, but that's crazy talk.
Well, I mean, Bank of America doesn't even expect to cut at all this year. So, I mean.
So here's my question. I am not a professional economist, but I do have an undergrad in economics. I do understand the economy. How is it that these companies, these firms, are now worried about unemployment continuing to go up? And the fact that we have a lot of debt maturing on the corporate level, that if they have to refi at these levels, will cause margin compression and could lead to further layoffs. In addition to a lot of coders will be facing rifts because of efficiencies created by AI, which will also add to layoffs. I just don't see what they're seeing.
Yeah, I don't see it either. And even if they don't care about unemployment, they have to care about inflation, and inflation's coming down.
Well, unemployment's half of the Fed's mandate now. It's equally as important as price stability. They have a dual mandate.
Okay, well, here's the thing. Powell kept saying he's not going to cut because of tariffs. If the tariffs go away, I mean, I think the pressure switches from Trump's recession that people thought was going to happen to it's Powell's recession if he doesn't stop being stubborn about this, right?
I agree, especially since the Atlanta Fed was going back and forth from 1.8 to 2.6% over the past couple of months about where GDP would come in. It came in at negative 0.3. Wasn't nearly as bad as what they were calling for.
Right. No, yeah, dude, GDP estimates are going to be 2.4% in Q2.
So I don't understand why we're so worried about whether the neutral rate is 2% or 3%. To me, it doesn't make a difference. And to most people, it doesn't make a difference. People are not going to stop spending money because inflation's at 3% instead of 2%. That argument has never made sense. If you're going to buy groceries and your normal groceries cost you $102 compared to $100 last year, or $103 compared to $100 last year, you're still spending the money. It's a $1 difference.
Right.
It doesn't make any sense compared to unemployment. The last thing that you want is unemployment to go up, because that is where you start getting triggers of a recession. That is where you start getting triggers of companies really having layoffs, because less people are making money, which means less people are spending money in the economy. That is the last thing you want. If anything, this should be a mandate that's weighted toward supporting jobs in the economy. I don't know why they ever went to a dual mandate 50-50. The number one function should be supporting the economy for economic growth.
Do you think if we get a good CPI print and Trump lays back on the tariffs and Powell doesn't cut, that it's going to purely be political at that point?
I don't see how anybody could take it as not being political at that point.
Yeah.
There's just, and look, I'm willing to say I'm wrong, but somebody needs to convince me that there is another reason that I'm not seeing. And I will happily admit that I'm wrong. But a booming economy, and an economy where there are good jobs for all Americans, is what you want. And you want businesses expanding. You want options. And if he does not cut, he's going to push us into the brink of corporations having to refi debt that they probably have rates of 3 or 4% because of where the Fed rate was when we took out the debt. They're having to refi at 7 or 8% because you're not getting a 4.5% rate on a refi on debt.
Not wrong. You are not wrong at all about this. I also think, like, Powell was late in 2021. He handled 2023 and 2024 really well. If he's late in 2025, I just think, his legacy as the Fed chair, it's not going to be looked at the right way. I mean, he's not going to be the guy that ended up saving the economy. And again, I give him a lot of credit for 23 and 24 managing the 10 trillion we printed. But he could have better managed it in 21 if he wasn't as late. And then he could have better managed the downside of it in 2025 if he doesn't end up being late, which everyone right now already thinks that he's very late.
Look, everybody can always do better in hindsight. Powell did a great job, and the Fed did a great job during an unprecedented time, and they've gotten a lot of credit, and that credit's been deserved. They did, being late to the party worked in their favor because we had no landing, which was the best scenario. You're not going to get the best scenario out of stalling at this point. It's just not happening.
Yeah. Steve, I want you to listen to one of my favorite Wall Street analysts, Julian Emanuel. He's on for a couple minutes. Let's hear his take on the markets. He was really bullish, then got a little bit more bearish. Now it looks like he's bullish again. So let's hear his take on this China tariff stuff.
What he calls, quote, the fallen angel. So joining us now is Evercore ISI Senior Managing Director, Julian Emanuel. Julian, it's great to have you back on Overtime. Let's start right there. Are these market moves overdone? Where would you be lightening up?
Well, so look, look, we have come a very long way, basically 20% off the lows of April 7th. Frankly, when the bearishness was as pervasive as we'd ever seen it since the financial crisis. Now, we're not in the exact opposite sort of ebullience, but certainly what we saw today was really a ratification of the fact that things have gotten incrementally better and that we can sort of quantify what tariffs could look like. But it does feel like it's a bit of a best case scenario. And so for us, what we want to do is we want to stick with the winners of the old bull market, the names that got hit the most during the downturn, and the names that have been leading, and you've been showing them on your screen, whether you call it Mag 7 or you call it tech or you call it communication services, consumer discretionary. These things, in our mind, are going to continue to lead the charge to what we think are going to be eventual all-time highs, though perhaps that may have to wait until 2026.
It's interesting to hear you say that because at least ahead of today, and I realize a lot happened and changed over the weekend, but an equal-weighted version of the S&P 500 had outperformed that standard cap-weighted S&P for 6 consecutive sessions. It was the longest streak of outperformance since January of 2023. We've been talking about this rotation into the other 493. You think that's come and gone here then?
Well, we wouldn't say it's come and gone because ultimately, if you do get to new highs, as we eventually expect, those names will participate. But if you look at how bull markets tend to evolve, particularly one which we would say is structural like this, with comparisons to the internet structural bull market of the late 1990s, AI is a theme that has longer legs. And frankly, given the fact that what we haven't seen is a robust capital market cycle, and this is part of the anticipation and part of the reason today's gains were as strong as they were, those names and those themes tend to lead that type of capital market cycle.
Julian, we now have these 2 rolling 90-day tariff pauses. One, I think that ends in about 2 months. Another, arguably more important in those 3 months. What does that mean for certainty and predictability in this market? And do you think we see another pull forward of demand during this China pause in particular?
Well, so if you get the anecdotal read-throughs from shipping people, they're talking about, oh, you're going to have an absolute shipping boom over the next, 30 to 90 days to get in front of that expiring period. And that certainly makes sense. So the focus will continue to be on what the cameras look like at the Port of Los Angeles. But what it really means is that there is going to be this heightened uncertainty, albeit a lot less than it was in April. But when uncertainty remains as pervasive as is likely to be the case, at 23 times earnings at the broad S&P 500, we want to be selective rather than just, wantonly buying the index.
Because we're in
Steve, your thoughts? The idea that, hey, we are back in a bull market and we're probably going higher?
Yeah, I agree. I think we are going higher. And there's something that you said in the beginning that I agree with a lot. And to expand on it, it's crazy to think that people just want to sell stocks when things get difficult because things always get better. And if you sold during the craziness last month or the month before, there is very slim chance that you got back in at the right time and you missed all these gains.
Yeah.
And everybody that's been contributing to retirement plans have been continuously buying into weakness. And they're doing pretty good. It's just, it's amazing that people get so crazy when stocks go down by 5 or 10%. But you should want to buy more.
Yeah, I think the emotions this time were because everyone felt it was like a self-inflicted disaster for why it felt. But I mean, you're right. If you sold anywhere near that early April time and you didn't get back in, you missed a 20% move, which is just not easy to get.
I mean, we know that most of the annual gains on a year in and year out basis happen over 8 to 10 trading days.
That's it. Yeah.
It is impossible to predict when those days are going to be. Impossible.
No, it is. It is impossible, and this is why the hedgies, are probably chasing this, because they obviously tried to predict those 10 best days, and they didn't realize it would come right after the 3 worst days in April.
Yeah, and look, you can look smart for a certain amount of time until you don't. And people who are selling may have looked smart for a day or a week or 2 weeks, but I doubt they got back in because they probably thought this was going to be an elongated sell-off and this was going to take a lot longer to turn around than it did. And now we're in a position where we could really see a year-end close between 6,500 and 7,000.
Whoa, you think 7,000 is on the table?
I mean, I said 7,000 before the year started.
You did say 7,000.
So I think that we had a hiccup and we could still get there. Sometimes the road taken isn't what matters, it's what the end result is. And yeah, maybe we experience some pain, but maybe we get a lot of tailwinds coming out of that short-term pain. I mean, these things are just too hard to predict. And I always find it interesting that when people go to buy sneakers or a TV or a computer, they love paying a 30% discount or a 20% discount. But they get freaked out when it's a stock that's on sale. Doesn't make any sense.
Someone says you are smarter if you sold NVIDIA at 159 and then bought it back at 98. I would agree. You're a really smart person. It's just the majority of people aren't smart enough to do that, including myself and Steve.
Yeah, of course. Look, if you can do that, great. More power to you. I don't know a single person that can time the markets. I mean, I've timed a few things. I can't time every single thing. And there are things I get wrong. I don't know a single person. I know a lot of people that can continuously time things correct and move in and out of positions. We're not talking about day trading. We're talking about picking tops or semi-tops and then getting back in at a semi-low.
We're talking about active portfolio management and hedging,
Yes.
etc. Yeah, dude, there's a reason most of the hedge funds don't beat the S&P 500.
Correct.
Buffett has his famous bet: he'll give $1 million to anyone who can consistently beat it. Like it's really hard that's why Buffett doesn't portfolio manage per se. He just goes long. He'll trim here and there, but ultimately he lets compounding do its thing. If you're trying to actively manage, it's just tougher to time the top and the bottom. I think my best version of timing is like selling options, right? So I'm playing the volatility up and down, and I'm not always going to be perfect at it, but the idea that you should leave the markets, especially if you're, I don't know, in your 20s, 30s, 40s, 50s, even your 60s, right? Like it's just like if you're getting ready to set up for a few decades of compounding, leaving entirely to try to time it again, it's just tough to do. It's not impossible. It's just tough.
It's very tough. And all those people that freaked out that they were going to lose so much money, they probably didn't get back in.
No, because why? Because you feel like the smartest guy in the world. So why would you?
This was a very short-lived downturn.
Okay, let's play a little devil's advocate. What could you come up with as a reason for why we revisit maybe 5,000 on the S&P? What could get us to be that bad, or do you not see that bear case at all anymore?
No, I don't. I was never in the camp that this was going to be, and you know this. I've been very public about this, and I've probably been one of the more bullish people around this whole thing. And I've outlined several times about what I felt was happening. And people didn't want to give him credit. I'm not a Republican, I'm an independent, but I truly felt something was happening. And we just don't think we get back to 5,000. If we do, it means that the China trade deal is completely done. The UK and the US back out. You have India and Pakistan going at it again. There's just got to be so many things to happen to get us back to where we were and the negativity that we had. There's too many things on the horizon. They're going to get a tax bill passed one way or another.
Yeah.
The Fed is going to start cutting one way or another. Whether that happens in June, July, or September, they're going to start cutting. Corporate earnings are telling you that companies are getting more profitable, their margins are expanding, and EPS is strong. So you have all those things that are happening and are probably going to happen. I'm not seeing a case for the market to retrace to the negativity that we have.
Yeah, I mean, we got this tariff revenues as well. We had about 16 billion of tariff revenues in April. We're on track for about 200 billion for the year. Obviously, it's not really making a dent in the deficit. The deficit has risen to 1 trillion, which is up 23% year to date. So I guess the one bear case could be our deficit. But at this point, dude, it's one of those things where if America's not going to default on the debt, yes, we need to get spending under control. But I don't know if that's the reason why the market collapses.
I mean, it's been the same story for the past 10, 20 years.
Yeah, and I don't think it's changing. I mean, if Doge cannot do anything about this, then it's probably not going to easily be resolved.
You can grow your way out of this, and I know people hate hearing that, but you can grow your way out of this. And if rates come down low enough, you can refi your way into a better position.
SoFi, you sold some covered calls at 15. You think we get there, or what do you think of this pump right here?
Probably. Why wouldn't we?
Well, I think we really get there if we get a rate cut. But if we don't get a cut in June, then I mean, it could definitely get to 15. But.
So, and I made sure that my covered calls expired before the Fed.
Yeah, I think that's a smart thing to do.
So we'll see what happens. I mean, those I can't think about at the moment. I can think about those next month.
Yeah, I mean, I'm still hoping for 20 by the end of the year, but it's just gonna have to get a lot more luck from the market.
I don't know if that happens.
I think it's possible. I just, the narrative's got to change a bit, but I definitely think it's possible.
Is it possible? Yes. Is it probable? Undetermined at this point, because they continuously put up great quarters. They continuously triple beat on revenue, beat on profitability, and increased guidance. And the market does not care.
Yeah.
So it's just, I don't know.
Firm was up.
As a banking stock.
Yeah, Firm was up 15% on the day. This one was down almost 20% last week. So this one recovering a lot. You got a lot of names, Steve. I mean, what's your take on this whole pharma stuff by Trump? I mean, think it's a good idea for price caps on drugs?
So I need to look into actually read it, what he signed. My understanding, and I have not read it, is only that they cannot charge a different price in the U.S. than they do overseas.
Yes, exactly.
So if my understanding is correct, I'm all for that, because that's not saying you can only charge X. It is saying you cannot charge more in the U.S. than you are charging overseas.
Yeah.
Well, you can't price gouge.
I think Bernie Sanders and Elizabeth Warren are going to have to agree that this was a pretty good executive order. And if they don't, we're going to find out, how many people actually care about this issue versus those who just talk about it. But Big Pharma was unaffected today. The PBMs were affected, like a CVS, but the J&Js, Eli Lilly's, they were fine. So market's obviously thinking that the redistribution of those profits is going to be a way to overcompensate for the lack of it coming from the United States.
Yeah, we'll see. I mean, we need to see how it plays out, but I think it's good for Americans that prices on prescriptions are going to be the same as they are overseas, because that means that they're potentially coming down in price, which is a good thing.
I do think I agree with John right here. I do think the courts are going to definitely give it some issues. But he's starting the discussion, and the question is just if they can get it passed through law at this point.
And let's not forget, what do you have next year?
Midterms.
Exactly.
Yeah.
Anybody who thought that this was not getting resolved over the summer, I think that they were crazy, because these people are not dumb. Everybody wants to think that these people are dumb. They're not dumb. They know that if this gets extended into a longer period of time, it's seriously going to impact midterms, even though they're next year, because the stigma is going to be there. This was never not getting sorted out.
Right. All right. So, bull market. It's back on, in your opinion.
Bull market's back on.
Bull market is back on. S&P, we're 5% away from all-time highs. Kind of feels like any India deal, Canada deal, anything could push it over at this point.
Yeah, and look, this is a good scenario because guess what? We're near all-time highs, and the biggest companies in the world are not near their all-time highs. They're not 1 or 2% away.
Yeah.
Which is great because if they rally, it's taking us into new all-time highs.
Yeah, you got hedge funds that have to buy. You have general FOMO chasing. You have earnings in Q2 that will be affected by tariffs, but for tech companies, probably not that aggressively.
I mean, how big could the impact really be?
So like April's like 1 month in quarter two. I don't know the exact stats, but if Walmart had to mark up a bunch of prices and lose some margins because of the tariffs, because they did have to pay tariffs in April, that could be an issue. But for Meta, Google, I mean, for those companies, I don't think.
Guess what? I'm not worried about freaking Walmart or Costco.
That's fair.
Definitely not worried about them.
That is fair.
Big tech is going to crush. Big tech is going to lead us forward. And in a lower rate environment, the banks are going to do really well. BDCs are going to do really well. REITs are going to do really well. I think you're going to continuously see utilities do well because we need more energy. And if we see M&A activity in the oil patch, which I think we're going to see, super majors are going to be fine at these levels. As long as oil stays around 60, super majors are fine.
Why is Bloomberg reporting that Coinbase is getting into the S&P 500? There was the S&P 500 list is not until the end of May, so I guess it's a rumor. Coinbase Global set to join S&P 500. All right, if you own coin. This is how can this be confirmed though? Like there's like this has to be a leak or this has to be a rumor because there's no set announcement today.
Who knows?
Coinbase up 4%. Coinbase is definitely loving this news wrap. 9% for the day, 4% after hours currently right now.
I mean, look, there's a lot of interesting plays, and I think things are going to work themselves out. There's no reason for Amazon, Meta, Nvidia, or Alphabet to trade at a lower multiple than old school blue chip stocks. They have less growth, weaker balance sheets, and weaker profitability. And I think that that's all going to get worked out. Because if the markets truly are efficient, a company that's generating $60 to $90 billion in profit should be should have a way larger market cap than a company doing 10 to 20 billion.
Yeah. Well, not too bad. It does look like we put in the lows based on all this tariff volatility, and now it's just more volatility, but good news baked into the volatility if we get more trade deals. And that's it.
Yeah, and look, market will probably sell off a little bit tomorrow because of how much it went up today. So what?
Yeah.
So what?
I agree.
Doesn't matter. Can't look at these things day to day. And everybody should remember, it matters on inflows. And every 2 weeks, you have more inflows going in to retirement accounts. And the most popular types of things in retirement accounts are S&P index funds, target date funds, and total market funds. And the largest holdings in those are the Mag 7. And every 2 weeks, people are buying them indirectly through their 401k accounts, 403b accounts, SEMPs, et cetera, et cetera. You get worried when those types of things get sold off.
Yeah, I mean,
I don't know a single person that's selling off their freaking retirement accounts.
You've been making this point for months now, which is that every 2 weeks, money comes into the market.
Yes.
Tens and tens of billions of dollars every 2 weeks enters into the market. And until that stops, there's constantly going to be liquidity, regardless of whatever price Apple's trading at to buy Apple. Apple, by the way, up 6.3%. So I mean, for all the overvalued conversation on Apple, even like, the market doesn't care. Like, if we're going higher, we're going higher. And these stocks are getting back to where they were before Liberation Day.
Yeah. And look, I get it. A lot of people dislike Apple's growth and disagree with its decisions. I disagree with how it's allocated capital in their R&D, things like that. But at the same time, it's crazy to me that Apple has a lower forward multiple on earnings than companies that do a tenth of their profitability. It's nuts. It's nuts with less growth on the horizon. Think about it. What's Costco's growth vector? Increasing the price of their membership and adding stores?
It's not a tech company. It doesn't scale like a tech company.
Apple has proven it can scale and it can create divisions out of nowhere. Services is going to be $100 billion run rate this year. We can not agree with certain things Apple's done, but to think that it's not going to get bigger over the next couple of years, it's kind of crazy.
By the way, guys, the Coinbase news is official. I had no idea they were announcing this today. It looks like a one-off announcement. They're saying Coinbase will replace Discover Financial, and it'll happen next Monday. Usually they have every third Friday of the quarter, they do an announcement, but I guess they did a one-off today. So more Bitcoin in the S&P. There you go.
You see JP Morgan bought more SoFi?
Well, so I don't like these headlines. When JP Morgan, BlackRock, and Goldman buy any company, they have to buy they are required to. So when everyone says, "Oh, BlackRock increased their Palantirs," I'm like, they have to buy Palantir. They have hundreds of billions of assets under custody. They're not choosing to buy Palantir. So yeah, it's good that they bought more SoFi, but at the end of the day, it's like we need actual independent funds that are not market makers buying.
If they end up acquiring SoFi, I'm just going to be like, I can't believe this guy got it right.
I don't think they're going to acquire SoFi. I wouldn't hate it, but I don't think so. But again, the theory you talked about Noto becoming the CEO of JP Morgan, then after I love that theory.
And that is not a me thing. I did not start that. I'm just regurgitating what I heard.
I love that idea.
Not a bad idea.
Noto could he is the JPM. Like he fits the character trait to be a JPM.
He fits the character trait so well.
Yeah.
So well.
All right, Steve. Good stuff. Steve's Twitter, I'm putting right here in the chat, and you guys can check out his Seeking Alpha. Steve is officially at 10K on Twitter.
So, look at that. 10K, yeah.
You don't care, do you?
No, not at all. Why would I care?
Well, 10,000 people care about your opinion.
Yeah, that's awesome. I'm not looking at it like, oh my God, 10,000. I didn't even know until you said it. I didn't even know I had 9,000 until you told me I was close to 10,000.
Well, you got 10,000 people who care. So
I am going to write a pretty big post tonight, though. Tonight or tomorrow, I'm going to write a pretty big post about how inefficient the market actually is.
I like it. I mean, when Walmart's trading at the multiples it's trading at, I think it's a good thing to get out there.
I was thinking about something else. Like we were talking about profitability and how you would, in business, you would pay more for a company that generates more profit. Like if you're going to buy a real estate asset that's producing $100 million versus $50 million, you're paying more money for the one that's producing $100 million of funds from operations or EBITDA, whatever metric you want to look at. And the fact that we have companies, I'm not going to name any, that are generating minimal profitability, and then you have companies that are generating tens of billions. I'm not talking about the tech ones. Look at AT&T. AT&T is going to do $16 billion or more in free cash flow this year, and it's got a smaller market cap than certain tech companies. It's just crazy.
I think it deserves a post. It deserves a long post.
And it's going to be a long post with tables and maybe some charts if I can fit them in there. It'll be a long one, but the Costco thing annoys the hell out of me. It really does.
Yeah. All right, Steve. Appreciate it. We will talk to you tomorrow. Keep going from there.
Sounds good.
All right, later.
Right.
All right, folks. Coinbase, they are in the S&P. They are in the S&P. I don't know how the S&P made this announcement randomly today. This is on the S&P website. I don't think anyone expected. Usually I know when these come out, and apparently it came out today after hours, Monday, May 12th. So usually it's 3 companies replacing 3 other companies. I don't know if Discover Financial randomly didn't meet the listing requirements, and then today the S&P committee was like, all right, so we'll replace them and we'll add Coinbase. This is really weird, quite frankly. It doesn't make any sense to me. It's supposed to happen on every 3rd Friday of the 3rd quarter. So I don't know what the hell's going on. I really have no clue. But that is the official announcement from the website. Coinbase is joining the S&P 500. Robinhood did not get... Oh, Discovered was acquired by Capital One? What? Wait, when did that news come out? That has to be old news, right? Did that happen today? That has to be old news. Capital One receives approval to acquire Discover. That happened a long time ago, right? That was April 18th, 2025. Okay, so that wasn't that long ago. That was a month ago. I guess I forgot about that. So now that makes sense. So because one of the S&P 500 companies is getting swallowed up by another one, that is why they're allowing a new company to replace them. Got it. That makes a lot of sense. I forgot about that. Now this is making sense to me. So my next question is, why did they pick Coinbase and not Robinhood? What do they have against the hood? They really picked Coinbase over Robinhood, dude. That is so weird. I mean, look, I have no shade to Coinbase. Great company. Brian Armstrong, incredible CEO. I just, it is literally alpha against Bitcoin, and Robinhood is more of a diversified business to me. You would think the S&P 500 committee maybe wants more of a business, not just a proxy on Bitcoin, which is basically what Coinbase is right now. It's MicroStrategy is more of a higher proxy. Coin having a bigger market cap is not relevant because Williams Sonoma had a $19 billion market cap. So you have to have a certain amount of market cap, but that's not the reason the committee picks you. Hood right here down about 0.12% after hours. But that's weird, dude. Dude, if they had picked Hood, we'd be over 60 and it would be amazing after the momentum we've seen over the past month to get into the S&P. Hopefully it still happens later in the month. But that's weird, bro. They picked Coin. Out of all companies, they said, all right, Coinbase is next up on the list. Yeah, I forgot Discover and Capital One merged. I totally forgot about that. I'm just realizing now that you guys are telling me that they actually merged, and that led to an opening inside of the S&P. I just didn't know that opening was going to be announced today. Coinbase contributed more to the Trump inauguration, but didn't Hood though? We put in 2 million. Everyone put in 1. Hood put in 2. So if anything, you'd be ringing that bell if they picked Hood. Okay, let's try the bell thing. Okay, so let me fix the setting so we can fix the Temu bell. Okay, so I'm gonna switch the setting right here, and let me know if this fixes it. Okay, let's see if this. I'm not gonna ring like crazy, but let's see if it fixes. Okay, here we go. Let me know if it gets drowned out by the water. Yes, good, bad, no, or is that still an issue? Good, it's good. Hold on, let me try myself. Oh yeah, we fixed it. All right, cool, we fixed it. For anyone who hates the bell, boom, there you go. I just had to adjust a couple of settings like I did last time. I guess I mistakenly clicked one of the other audio settings like last week, and that's why it was messed up on Friday. All right, the bell is back. The bell is back. There we go. Now we just need to get a separate GPU to run the stream so that it doesn't have these random mic failures. So there we go. Have Steve and Joseph Carlson ever had a debate on Costco? Dude, I would love to host that. That would be great, bro. That would be great. Steve versus Joseph Carlson on Costco. That would be fun. That would be fun. All right, cool. I think that is it for the day. Amit, would you buy AMD? No, I just buy Nvidia. I don't hate buying AMD here, but I'm more and more convicted on Nvidia. So I think both will do fine in the next 5 years. I just personally like Nvidia more. So yeah, that's it. Nvidia, Hood, Palantir, Grab. I mean, these are kind of the core names of the portfolio still. Looking at a couple other names, haven't really made a thesis on them yet. So not really comfortable. Shopify last week should have pulled the trigger on that one. That one ran away from me. This one up 13% right here. I do think some of these names have become less attractive. Like they were really attractive last month. Now they're just good names that I have no problem buying into, but it's not the same value. So I think I do think over the coming weeks, we still need really good macro data, good trade deals. I'm afraid to sell any covered calls this week because we got CPI tomorrow. And if that CPI comes in better than expected, I think it's going to be a little tough to say, you know, here's my covered call on NVIDIA at 125. I mean, we could blast through that. Same thing with Hood at 60. Like we could really blast through these levels. Even on Palantir, even though I know it's up aggressively. Even SoFi at 14.15. I mean, we get a good CPI tomorrow. We get Fed probabilities to go up when it comes to a rate cut. I think we could have a really good day. We get a crappy CPI, then we could give back some of these gains. But I think at least for this week, it's a little tough to sell calls until we get into CPI. But I mean, in terms of really attractive opportunities, well, there's not a ton that I see right now. Obviously in April, there were a lot more, but take a look at this. This thing was crazy today. I mean, if you wanted to make 10,000% on your money in 2 months, here you go. Ticker symbol RGC, Biotech, Regencell Bioscience. It's up 10,000% in 2 months. You could have put in 10 grand in March and you would have 1.4 million right now. So, I mean, you know, some of these opportunities, not the easiest to find, not the easiest to chase either. But again, there's a lot of good names right now in the market. CoreWeave, that's been getting some momentum. Shopify, AMD was up today. It was, you know, AMD was at 95 last week. Now it's at almost 110. Like there's plenty of great opportunities of great fundamental companies, but shit like this is crazy, dude. And only in the market can we see it. Of course, Snapchat wanted to pump today. Sold this thing at 850. Now freaking Snapchat at 917. Of course, Snappy wanted to pump after the trade deal. Don't have Snapchat anymore, but plenty of opportunities. And if we're going back to all-time highs, stocks aren't necessarily the cheapest they've been all year, but they definitely don't have to get back to their cheap levels that they were at a month ago, which is why I think there are still plenty of opportunities that are out there currently right now. I mean, even Amazon got to 180 after earnings. Now it's at 208. Like, it's just incredible to see what a shift in narrative and momentum can actually do. Hims keeps calling me, dude, this freaking I want to buy it just to sell calls against it because I think the call premiums are so juicy. But I also feel like it's run so much at some point it chillaxes a little bit. But then I'm like, well, it's 34% short. It doesn't have to chillax. It could run to triple digits, you know, at least back to 70, which is all-time highs, pretty easily on any piece of good news. So I don't know. I haven't got it yet, but if I do get it, I would just be selling calls against it and trying to collect some premium because the call premiums are just incredible on Hims. And there's a lot of people there. Again, retail. So, and the daily recap today, we'll talk more about Palantir getting the $150 price target. Broadcom was up about 7% on the day. So I'll post that recap in like 2 hours. And yeah, Palantir upgraded from 125 to 150. I talked more about why it's so important. We talked about it in the market open, but it is going to help in normalizing this stock in the triple digits, which, look, a lot of us have a lot of gains on this stock. I think the one thing we want is for it to not be lost. And in order to not lose it, you know, we've got to keep it above that $100 level. So that's going to be important as well. What's your take on Nanalyze bashing Hood? So there's this YouTube channel called Nanalyze. They tend to do a lot of bearish videos. I saw a little bit of his video. His whole point is just if we have a 2008 recession, Hood will go bankrupt. And I'm like, okay, sure. If we have a 2008 recession, a lot of shit's going to hit the fan. But like, that was the point of his video. It was like, don't invest in Robinhood because if we have a 2008 recession, Robinhood go. I'm like, okay, a lot of shit's going to like, I don't know if that's a bear case. That's more so just like a thanks for the obvious. If we have a recession, things will be bad. So I don't really think he gave a bear case. I don't think there is a bear case there. I think he's just saying if in a recession, things can get bad. Coinbase up 12%. Again, the reason Coinbase is up is because they got into the S&P 500. They got into the S&P 500. So that's why they're getting some momentum. And then Archer, we looked at their earnings already. Beat on the top, miss on the bottom. Archer right here, up about 3.85% currently after hours right now. So that's what we got. And in terms of Hood, we did get a quick, not price target, but initiation by Raymond James. So Raymond James says right here, this came out right after the bell. Raymond James maintains market rating on Hood. They don't have a price target. They said Robinhood's standout revenue model generating 200 bips per client asset, 20x higher than Schwab, despite smaller average account sizes. With 60% year-over-year revenue growth and strong options activity, Robinhood's monetization strategy sets it apart, though the valuation remains elevated. So no price target, but they are bullish on Hood. Yes, the Bank of America price target for Palantir is always 1 year out. It's always 1 year out. And look, if we're getting back to a straight up bull market, S&P 500 closer to 6,500, Hood's going higher. Hood's going a lot higher. They sell 500 million options a quarter. April was all-time highs in options and equities. What do we think May's going to look like if we continue this momentum, even if we have some hiccups along the way? I mean, like Q2 is looking like it's going to be relatively strong, and people were worried about Q2. But if the trade deals are going to be resolved and we get some cuts, or even we get people excited about the potential of cuts, Robinhood's going to do well. I think Robinhood's going to do well. The Boston meetup, for those asking about it, I forgot to share this in the morning. There's the meetup form right there. We're doing Boston May 24th. I will give more details later this week, but if you are in the Boston area, you can sign up. And I don't think this is going to be a big meetup. I think maybe we'll have like 50 people there. So it might be a little bit more of an intimate meetup. And so I'll try to find a spot for everybody. But May 24th, I will be FSDing to Boston. And yeah, if you're near the region, we will have our fourth meetup of the year at Boston. Robinhood up a little bit after hours, 1.17. I don't think there's any news on Hood, but it's up a little bit. I don't think they got into the S&P, at least not yet. But Coinbase is the big one that got into the S&P 500. Would you buy more Hood now or write aggressive CSPs? I mean, look, Hood is very volatile. If Bitcoin tanks to like 95,000, Hood's probably going down, at least 5-6%, right? So like, I think aggressive cash curve puts are not horrible, but I also don't hate buying the stock right here. I mean, like the stock is just a reflection on the nature of the sentiment on the market. That's what Hood is until it becomes a fully diversified business, which it's not there yet. And we'll talk more about this tonight on the weekly when we get into Hood news at 9:30. But if we're going back to 6,500 on the S&P by the end of the year, I mean, Hood's going to be higher. So whether you want to collect some premiums or just hold on to the asset, I don't think it's crazy. I mean, I bought last week at like 55. So, I mean, I've not been afraid to buy into this trend. What about London meetup? Still working on details on that. Goal is June. I don't have details yet, but hopefully June. If not June, I will let you guys know. But more likely than not, by the end of the year, before the end of the year, we will have our London meetup. Yeah, I don't know if there's any Hood news after hours. I don't see any Hood news, but it is getting a little bit of a boost. Maybe it likes the Coinbase news because people think Hood's going to be next. Coinbase right here, 8%. But we do have a little bit of green. We do have some green. Amit, are you long on NVIDIA or sell after regaining all-time highs? I am long, bro. I think at least for the next 24 months, it's hard to be bearish given everything I'm seeing in tech. And so I think technology is progressing at a hypersonic speed. I think AI in particular is going to be the catalyst that really creates a revolution over the next decade. And I just think NVIDIA is at the center of it. So what all-time highs is 160. Like my average is like what, 117. Like, am I really going to be excited to sell at 160? Not really. I'd rather just, unless I see a material slowdown in capex or anything like that. But outside of that, I think you buy Nvidia to go long. I mean, what deltas do you buy CCs? I mean, look, I like, some parts of my position, like Hood, I have a decent chunk of Hood shares. Some of them I'll sell really aggressive covered calls on. The other ones will be really out of the money. And then there's a portion of them that I just don't sell calls on. So if I'm going really out of the money, 0.2, 0.5, 0.15. And if I'm being more aggressive, 0.25, 0.3, 0.32, it really just depends on so if you have like 3,000 shares, right? If we do a simple 33, 1,000 you don't sell any covered calls on, 1,000 you sell more aggressive 0.3s, and then the other 1,000 you sell 0.15, 0.2s, right? So I think that's an easy way to think about it. But if you're just in it for the premium, then you kind of sell aggressive covered calls. And I think that the thing that people mess up on covered calls is like, if you're in it for the premium and you buy a stock and you buy Hood at 54, you sell a covered call at 55 by the end of the month. Let's say Hood's at 60 by the end of the month. You got to be happy with the fact that you collected that premium. You collected that $1 of share appreciation, and you take the money and run. And if you really want to stay in the game for longer, then you can roll the contract out in the future. But if you know that you're in it for the premium and the stock just happened to go above your strike price and you're missing out on the opportunity cost of those extra $4, you got to mentally be able to deal with the fact that you're not entitled to that. And if you want to be entitled to that, then you just have to be in the contract for longer. But I don't think it's one of those things where you're missing out on money. It's like, no, you came in with the intention of making that premium and hopefully making that delta between your strike and your average. But it doesn't mean you need it to be there for Hood going to 60. And if you want to be there, then you stay in the contract and you just manage the position over time. But again, I like covered calls because it's the one thing where you could lose and you could still win. You could be wrong on the direction and you could still make a profit. And with buying calls, that's not the same. You buy calls, you're wrong in the direction, you're done. You lose all your money. All your premium's gone. So I think with selling options, you get to be in a little bit of a better situation. Yeah, I do weeklies. I actually used to do monthlies, but I'm starting to like the weeklies a lot more. Just because there's so much news, day to day. You kind of have to be able to manage them every single week. And if you can do, if you're trying to do like 3% in a month and you can do 0.65% in a week, you can kind of average out, if you're trying to do 4% in a month, you get 1% a week. So it's not like the deltas or premiums are necessarily that different. Please say something about Grab. I love Grab. I am still max allocated to Grab. I literally have as many option contracts as Robinhood is allowing me to buy. I just think the street needs a catalyst to really catapult it. I think earnings is more than enough. Oh, you want to hear something about Grab, dude? Here's a stat on Grab. I was reading this last night and it was insane. In general, the street needs, I think, the go-to deal to happen. I don't think the street should need that deal to happen, but now that that's just like up there and it's hanging around until we get that go-to deal, I think it's going to be a little bit stuck, essentially. It's not going to be able to get the love that the market wants to give it because you got this overhang of what they're going to do with their $6 billion in cash. But I looked at a valuation argument yesterday on Grab with an easy share price of 650. If you look at a couple of these metrics, and I was like, okay, so regardless of go-to, this is undervalued. So let me see if I can find it right here. I do not think that they need go-to to do what they need to do. It was looking at their EV over EBITDA. If I can't find it here, I'll show it tomorrow. But essentially, when you look at it compared to Uber and DoorDash, they're trading at a heavy discount and they're growing faster than them. So the mobilities and deliveries business in and of itself is worth 650. And then, GFIN is a gem. That's the financial offering. If you put that on top of it, it tends to look quite attractive, even at these levels. Yeah, I can't find it. I'll show it tomorrow. It was in one of the articles I was reading, so I'll pull it up tomorrow, then I'll show it on the show. But essentially, you can buy. You're getting GFIN for free, and you're getting mobilities and deliveries. GFIN is their financial services. You're getting mobilities and deliveries at a steep 30 to 45% discount if you assume Grab's basic 20% growth rates. And so I think the stock's cheap. I really do. And they have $6 billion in cash, 30% trading in cash. So I think it'll happen, but the street is definitely waiting for the go-to acquisition. Coinbase right here up 8.6%. Robinhood up 1.08. S&P 500 after hours basically flat, up about 3.3% of the day. Average on Nvidia is 117. Are you doing a recap today? Yes, daily recap will be out in a couple hours. That'll be out. Grab options are expiring 2027, January 2027. Coinbase popped because they are now included in the S&P 500. I believe tomorrow I will have a friend to come on to talk about Nebius. So most likely tomorrow. If not, then definitely Wednesday. It's just based on his schedule. But he hit me up over the weekend. He wants to come on the show and talk about it. So he's a good friend of mine. You guys know him, Sam. Some of you guys may know him. Some of you guys may not. But I think he's been long since like $25 or something. And he can shed a lot of light on why this thing is up 18% and the role it's playing in the semiconductor space. So he'll either be on tomorrow or Wednesday. We'll get some coverage on that as well. All right, cool. That's it. Thank you, everybody. Appreciate it. Daily recap will be out a little bit later today. And yeah, hell of a day for the markets. Hell of a day for the markets. It reminds you why you are invested. It's exciting to witness. Thank you all for being here. It's fun with the community. It's really fun to be here with the community. I bought 200 NVIDIA on Friday. So yes, I might buy some more before earnings, but I did buy some at 116 on Friday. It's cool, dude. We all went through the pain. We all went through the hell that was April, which, 20% down on the S&P is never fun, but we're back. And if the worst of it is priced in, then maybe we've got a lot further to go. So exciting stuff. Thank you, everybody, for being here. NVIDIA earnings is May 28th. So we will get into that in a few weeks. That's going to be the big one. That's going to be the Super Bowl for the entire stock market. We need some good results from NVIDIA. But based on how Jensen's talking, we'll talk more about Jensen on the daily recap as well. It looks like the guy is not too scared about the future of his company because he knows this AI revolution is not stopping. So we just need NVIDIA to take us home for the end of Q1. All right, cool. That's it. Thank you, everybody. I will see you guys tomorrow on the market open. And again, daily recap will be out in a couple hours. Congrats to everyone on the day. And let's just try to continue to keep this momentum going. Thank you, everybody. Good night. See you guys tomorrow on the market open. Bye, everyone.